Traders, what's going on? Welcome back to my YouTube channel for the weekly Forex outlook and reviews. Hope you've had a good trading week, as it's been a really good week in my opinion. Now let's check the news and see what's happening. Last week was expecting to see some sort of reaction with the dollar. For the majority of the week, it kind of was a little bit slow, and then towards the end, it started to pick up again, which is pretty decent. But we can see coming towards the end of the week, the dollar really weakened. We start to see some pairs rally and tank, which is really interesting. So that will be kind of my bias going into next week, anticipating a continuation of that dollar weakness, but we'll see. Moving into next week, Monday, Tuesday doesn't look too bad in terms of dollar, pound, or euro news here. Wednesday, we have some CAD and USD news in the afternoon. That shouldn't be too bad. We have orange folder news here at around 11:30 a.m. in the morning. We'll see how that affects the pound, but I still don't think that it's going to affect the dollar too much. And the bias of the structure. Thursday, we have some red news on euro monetary policy statement. So that will be really interesting. Hopefully that will shake the euro up a little bit, because it's been a bit quiet, if I'll be brutally honest with you, and some ECB press conference there. So hopefully that will start putting some fire into that pair, or currency, should I say. Friday, we have more news in the morning, so be very careful. Red and orange folder news for a good portion of the morning for the euro. So let's see what happens there. Some of the forecasts here look pretty decent. Actually, I guess not. Well, we'll have to see. I'm not claiming to be the best fundamental guy out here. I'm just telling you to be careful. So this week, we're going to take a look at 11 pairs, as we usually do. The pairs starting from pound USD all the way down to gold. And the first one we'll take a look at is pound USD. So as you probably can see here, I've increased the thickness of these crosshairs, so you can see where I'm pointing. I did notice a few of you were mentioning you couldn't see where I was pointing last week on one of the YouTube videos. So hopefully this helps you out a bit. If it's a bit distracting, just let me know in the comments, but I'm sure it'll be all right. So as I said, we're starting to see dollar weakness. Now you can see the overall structure of the market is pushing bullish. The way we identify that obviously is through higher highs and higher lows. Also, what we want to monitor is the higher low level, where price created the new high and where price is trading above that level, which is this level here around 37.27. Now, we can see price has made a new higher high at this stage. My personal opinion is this: during a push phase, we need to see a pullback. And as long as price trades above this brick wall here, around 37.27, then we should be good for buys. But because of the amount of wick rejections and the slight consolidation before this strong push to the upside on Friday, I think the best plan of action for me would be to wait for price to break above 38 and then look for my buying opportunities. There's a 71 pip target back to some of these highs here around 39.09. And the reason why I've picked this level is because, one, at the close of this trading week, we can see a wick rejection. And when we see wick rejections, we need to look left slightly to understand why this could be happening. And as you can see here, when price was in this uptrend, we had a failure to break the higher low. And then this is the level that created the lower high to create the new lower low. So this is a very important level that we should be looking out for next week. If price manages to break close above this level, then there's a very high chance that we can continue to 39.09. Now, I say high chance, just remember this is of my own opinion. This is not signals or financial advice. So please, if you're going to take on any of the advice or trading ideas that I'm telling you, please make sure you're using your really good risk management here, and you're not risking more than you can lose. So that's kind of the idea on pound USD. Now, to add a confluence to this, we also have identified that the dollar has weakened since last week. And I do believe that if that continues, if the news doesn't shake it up or affect it, or the pound news that we've just seen isn't too bad for the pound, then there is no reason why we can't hit some of these target highs next week at 39.09. Pretty simple analysis at this moment in time. And I think this one's going to have to clear up a bit, like many other pairs that we're going to go on to see before we can make a full concrete analysis of this pair. But to be safe but sorry, the structure is bullish, behavior is bullish, and all the signs are pointing towards bullish. So that's what I'll be sticking to for at least 24 to 48 hours. Now, remember, if the market does start to sell off, well, guess what? I don't really care because I'm not going to invest any money into any sell plays until I see the sell bias really, really change. It means I don't lose any money. Okay. The next pair we'll take a look at is pound JPY. Now, this is very important to identify here. You saw on pound USD that price is pushing bullish, but here now on pound JPY, price is moving sideways. What does that mean? Well, it means that the pound is not strong. It means that the dollar is weak. And that's why we're getting that movement. Because if the pound was strong, then more often than not, what we're going to see is this market moving up as well. Now, I'm not saying they're 100% correlated, but what I am saying is that there usually would be a strong movement to the upside. The movement to the downside on GU started to correct or consolidate like we're seeing here in pound JPY, but then we started to break above structures and we started to push bullish. Here we're struggling a bit. Now, I know we closed Friday with a bullish move, but that doesn't tell us anything. Because we're ranging, what we want to do is just have a simple plan. We're waiting for price to break close above structure or break below and close below structure. So the levels that I'll be working with are areas in the market where I believe price can find traffic. And the level that I'm going to be working for my buys is 150.97. So a break close above for targets, which is 103 pips back to 152.01, or a break below for sells at 149.67 for an 88 pip target back down to 148.77. At the moment, I'm not sure what is going to happen with either pound or yen, and I personally would like to wait patiently for a sign or some sort of confluences across the board to identify which direction I'll take this trade. But as of now, there'll be no trading within this range. Next pair we'll take a look at is Euro JPY. So I did mention to you when we was going through the news that the Euro has been doing nothing whatsoever. So it'd be really nice to see that news come out next week and hopefully shake it up for the Euro and see if we can get some movements in these currency pairs. With Euro Yen, we are also moving sideways. Now, I haven't put any targets or break above or break below sells here yet. I think because of the news and the lack of data that I have to identify which way this market's going to go, I think at the moment I'll just strictly see this as a strong range, and I'm just going to wait for price to break above or below. Then I'm going to allow price to leave for a period of time, create some structure, and then come back for a retest, patterns, or whatever it may be, either to the upside or downside. I don't think this is a pair that's going to be on my list next week. I said I don't think, I know for a fact it won't be a pair on my list next week. So that's my analysis on Euro Yen. Next pair we'll take a look at is USD CAD. Now, this should be very easy to identify why we'll be looking for sales next week. We know that the dollar is weak, and we've also seen evidence of that with GU. Now, with USD CAD, we can see the overall sentiment of the market. I've popped in this brick wall here, is making lower lows and lower highs. At the moment, we're in a push phase, so I do suspect price to pull back a bit. Now, as long as price trades below the previous lower high, which is around 25.78, we should be good for sells. But the best plan of action, I believe, is to see price break a lower low level in the market to then make a new lower low and look for a retest and continuation. And the break of 24.86 will be really nice to look for sells, and then look for some targets down here, which is some of these major lows at 23.83. If you look here, if we start to break below 24.86, the traffic to the downside is super, super clean. As long as the dollar remains weak and we get a strong enough break close below, I really do believe this 104 pip move to the downside is possible next week. So look out for this one. I think this would be a really good play. The structure, the behavior, the confluences, and the fact that we don't have too much traffic to the left here, I think this will be a really, really good trading opportunity if it continues to line up. So that's my analysis on USD CAD. The next pair we'll take a look at is USD JPY. Now, understand this. We're not seeing strength from the pound. We're not seeing strength from euro. and we're not seeing strength from yen. At the moment, we are only seeing weakness from the dollar. The structure of this market is sell biased. It's making low lows and lower highs. And I do believe as long as price trades below 109.91, we should be good for sells. However, I don't like what price is doing at the moment, which is showing a depletion in this bearish trend here. And we're coming to a really major key level around 108.50, where price has created the last major low. So in order to look for continuation sells, I don't really want to trade within this messy structure here. I don't really fancy a pullback because there's nothing to identify the dollar strength at the moment. So I think the best plan of action for me next week is to look for price to break 108.50. If we get a break close below this level, then it'll be the same process. I'm looking for a 4H candle close, looking for a pullback retest or a continuation, or scaling down opportunities to look for my patterns and my processes. I wouldn't go too deep on this one. There are much easier pairs to be trading right now. We'll go on to see a couple of them. This should be an easy play based on the fact that the dollar is weak, but the fact that the yen isn't too strong or isn't strong at all, you might find yourself struggling with this one a little bit. I think we could range a lot longer next week until we get an identifying mark of yen strengthening and a real valid reason or confluence that the dollar will remain weak. That's my analysis on USD JPY. Next pair we'll take a look at is Euro New Zealand dollar. This analysis last week was looking for potential sells on this structure midweek. That was the analysis given, simply because price was failing to break above some of these major highs here, and we had the break close below. That was the idea. If we break close below 68.59, we should see a continuation back down to 66.87. That's exactly what's happened. I do believe, because there is no evidence to support euro strength at the moment, I do believe that this structure is still sell bias and that we can continue all the way back down to some of these major lows here. Now, the thing is, there is a lot of euro news yet next week, which is going to affect the euro majorly. And this market structure could just start to rocket to the upside. But for the next 24 to 48 hours, I have to stick to what I see, which is price action first amongst everything else, and say to myself, well, if it's sell bias, as long as we trade below 68.59, I can continue to look for sells. So if we get a retest at this level and price fails to break above, retesting the previous higher low that it previously broke, then I'll look for targets back down to some of these lows here at 66.87. Let's just check the range on this, because Euro New Zealand dollar's range is absolutely huge. Okay, 172 pips. Now, just make a note of this. Just because this is 172 pips, it doesn't mean you need to take the full whack. Just go for your targets and just know in the back of your mind that if price doesn't break above some of these levels and it starts to push bearish, there's a high chance it can get to some of these major lows, but all you need is a small piece of the pie in order to get in and out the markets. Now, if price doesn't pull back for the retest, I'm not trading between this range. It makes no sense. I want clearer price action. So the second plan of action, or even the first, to be honest with you, it doesn't matter, would be to see a break of 66.87, then look for those retests back down to a really nice level in the market where price previously acted at, which is 65.93. That's a 92 pip move again as well. And if you know how to scale down and use your lower time frames, then you'll be in a really good position to take advantage of some really good risk reward ratio trades if you're able to do that. So that's kind of the plan. Sell bias for now in Euro New Zealand dollar. Nothing to suggest otherwise. And I think the two plan of actions is pretty simple. Either a retest of the previous structure that was broken, or a break of a major low back down to a new major low at 65.93. Next pair we'll take a look at is Aussie dollar USD. This just adds confluence and supports the fact that we've identified dollar weakness. The overall sentiment of the market is pushing bullish. It was ranging for a long period of time last week, if you noticed. And once we broke above 76, 77, you can see we continued back up to a major high in the market at 77.61. Now, this is how we like to trade. Wait for price to break above, look for then targets or traffic areas for management purposes, and then targets to look to potentially target for your take profits. Now, I think the easiest plan of action moving into next week is to look for price to break above 77.61 for then continuations back up to 78.32. We do have a retest level that I have put in here as a potential retest level at 76.77. The reason for that is because after we break out of a range, more often than not, price does like to come back to retest those ranges before then continuing up. It is a plan B action. I would much rather see price break above 77.61 and see that continuation up. Because truthfully, there's nothing to support dollar strength right now. So I think why wait for the pullback? You're consolidating right now. You've shown signs that you tried to push bearish, you failed. You know, you've had this behavior here for a very long period of time where there's been no real bearish sentiment, multiple wick rejections showing bullish sentiment. Just break above, close, and let's see if we can get some targets to those highs. So that'll be the play that I'll be looking for moving into next week. The next pair we'll take a look at is Euro Aussie dollar, just to support our previous analysis and the fact that we've seen no strength from the euro. We can also see Aussie dollar USD is showing signs of Aussie dollar strength, or let's say dollar weakness, euro weakness here. It goes without saying that we are just looking for sells on Euro Aussie dollar. Now, I just want to make this very clear. Price action can change within a matter of hours. So this analysis only stands for about 24 to 48 hours. And if the market sentiment changes because of, let's say, news or just some sort of unexpected event in the world, then what we should do, or you should be doing, is making sure you come into your charts, you're allowing that news or that the behavior of the market to settle, and then coming back, removing all your lines, all your targets, all your break above or break below levels, and just redoing it again. You should be focused on structure and behavior simultaneously so you can add confluence when you go down and start scaling down for your patterns and your processes. So as I said, this stands for the next 24 to 48 hours unless nothing happens. So sell bias, no strength in the euro, Aussie dollar showing strong signs of strength with the previous pair, which was Aussie dollar USD. And I think the two plan of actions is the retest level at 55.35 for a continuation back down to some of these major lows. Now, I just again want to make sure you understand when price pushes up, it will be pushing bullish, and this will become a major level in the market. Management purpose levels, target levels if we break it. Overall sentiment of the market is pushing bearish, not yet confirmed. I do hope that if price trades below 55.35, we should continue down, creating that downtrend, which then should come back down to some of these lows at 53.74 and long-term targets at 52.80. The retest is a great plan of action. And if we don't retest, then I think we need to get out of this area first. There's too much traffic here to the left, and I'd much prefer to see a break of 53.74 and then looking for some targets back down to 52.80. We've put a retest level target here with a range of 164 pips. Don't get excited by it. Just understand that could be the range you could be trading. And then we have the target sells or the break below here for target sells at 93 pips to the downside. I much prefer this plan rather than the retest, but neither are wrong based on this structure and the evidence we're gathering across the board. So that's my analysis on Euro Aussie dollar. Next pair we'll take a look at is Euro USD. Now, pretty simple with this one. It's not that the euro is strong. It's just that the dollar is super, super weak. The only plan of action that I think you should be looking for, and I've put this retest level in here at 1929, just so that you understand, as long as price trades above the brick wall and this key level, you should be good for buys no matter what. But the best plan of action is to wait for price to break above 1992 and then look for that retest for continuations up. We don't really have targets, and I'm not planning to do this, to be brutally honest with you. We do have a really nice target level up here, but I would say to you, just target your 1 to 2s, your 1 to 3s, whatever it is. But the first thing you should be focusing on is your risk before your reward. So no matter what target you've got, if you're focusing on your risk, then you'll be trailing your stop losses into half, going break evens, and trading your stop loss behind your profits. And then whatever the target will be, the target will be. So this will be the first plan of action. But as long as price trades above 1929, we should be good for buys. And I think this is easy setup or plan for you to be looking for buys next week. Just be careful of the Euro Aussie dollar news. Oh, the Euro news. Next pair we'll take a look at is New Zealand dollar USD. Again, dollar weakness, family, very simple. The structure of the market was ranging last week. The price couldn't break above 70.68. We have broken above. I've put a potential retest level here, which I just think is pretty nonsense of me to do that. I don't want to see price come back here, but you must understand if price starts to come back to this consolidation, there's a very high chance price could respect it and then continue up. But we don't really want to see this go too bearish next week. We much prefer to see a continuation of the structure to the upside. A break of 71.80 would be fantastic, and then looking for a target to 72.54 with a 73 pip range to the upside. Simple analysis. There's nothing else to think about here. We know the dollar is weak. We can see the sentiment of this market is bullish. Let's just wait for the breaks and see if we get these continuations. Final pair we'll take a look at is gold. Now, I just want to share this analysis with you. We kept this on here for those to be reminded of this analysis. And this is not me trying to show off here or anything, because it doesn't take a brain scientist to understand how to do this. But the market was ranging. All you're looking for is break belows, break aboves, and then target levels or continuation levels. That's all you're looking for. Gold last week, Sunday, we analyzed this as a range. These were the exact levels we were looking for. We said we'll wait for a break of the low, a break of the high, look for the retest and the continuations. And while price isn't here, guess what? Stay away. Wait for price to do what you've planned for it to do. If it does it, then guess what? Take the trade. The break above this level was absolutely beautiful. It was convincing. We have a really strong break. We have a really nice pullback here. And then from price coming back to this level, it doesn't need to be your perfect retest, but you get two bearish candles here on the 4H time frame, which is 8 hours of information indicating a pullback, which can be easily recognizable on the lower time frames. Then you have a bearish candle again that rejected and turned bullish. From here to the structural highs was almost a 200 pip move. And if you was able to take advantage of that, I'm really happy. If you wasn't, let this be an example to you why patience is important, why you need to wait for those breaks, and why you should be waiting for those signs like the wick rejections, indecision candles, bullish candles, bearish candles, whatever it may be, to then take your trades. My analysis on gold next week is very simple. We should see a continuation bullish to the upside, just for the simple fact that the dollar is weak. We have had this break above this structure here. We've also had this retest of this structure here. Now, what I'd like to see price do is trade above this key level, because now this becomes the major key level in the market, lining up the confluence here with the brick wall at 1760. What I'd like to see price do is either come back for a retest of this level and see a continuation back to some of the highs, or even better still, we have enough information here to validate that this is a major level in the market. So what I'd like to see is a break close above this level. If we get a break close above and then a retest, then we'll be looking for these continuation buys. I think it's pretty simple to identify what's happening here on gold. The overall structure is talking to us and it's saying bullish. The overall behavior of this market is talking to us and saying bullish. And I think we need to stick to this until the market tells us otherwise. So that's my analysis on gold and the other 10 pairs. I hope you've enjoyed it. And if you did, please smash that like button for me. Subscribe if you're not already subscribed. Turn on notifications. And I just want to wish you all a fantastic week next week. The sun's coming out. The behavior of the market is changing. The volume's coming back. It's now time for you to capitalize, family. Until next time, continue to trust the process.